Welcome back to Yahoo Finance IPO Power Hour time. Data from Renaissance Capital noted that there were 113 initial public offerings in the second quarter. They raised $39.9 billion in capital. For reference, that's the busiest quarter for IPOs in over 2 decades. So why the boost? Well, let's bring in Barrett Daniels, U.S. IPO Services co-leader and West Region SPAC leader. Barrett, I guess the Goldman earnings this morning also underscored just how lucrative the IPO business is. But I guess the natural question is, why 2021?
Well, I think it's been a long time in the making. So, you can go back 10 years ago and IPOs were a bit of a different ballgame, right? It wasn't uncommon to have tech companies going public well before they were worth $1 billion, raising, upwards of $100 million. Fast forward to today, and the bar has been raised, right? You have to be pretty much a several billion-dollar company. And this happened for several reasons, right? But by and large, there was a change in mindset, certainly back in the 2010, 11, 12, where companies just decided staying private as long as possible is the best path to go forward. And now what we're seeing today is that created quite a massive pipeline and a bit of a glut, if you will. And so I think what we're seeing right now is that being released with a lot of these healthy and exciting IPOs.
Barrett, it feels like we are seeing a real shakedown on U.S. or Chinese companies looking to list in the U.S. A number of headlines that have come out from regulators over in China over the last week, tied to Didi's IPO, but also ones that could potentially affect those coming to market. What do you think that does to the pipeline for Chinese companies that are looking to list here when we're talking, well over 24 companies that we're still looking to come to market here in the U.S. in the second half of the year?
Well, I mean, obviously it's challenging times, but the way I think about it is this is less liquidity for everybody, and not just China, but also folks in the U.S. And there's a lot of U.S. investors that are invested in these companies. That's going to make those decisions a little bit trickier going forward. And then something else, startups just in general, they need that liquidity to be able to have somebody leave these companies and start the next great thing, right? This is critical. Certainly here in Silicon Valley, we see this all the time. Anytime there's a slowdown in liquidity, it feels like we see a slowdown in ingenuity and folks coming up with these great projects. So I think that's the part that worries me probably more than anything is the potential lack of liquidity that we could see from some of us.
Barrett, is there anything about the recent IPO trends that says anything about the size of companies going public? Because I guess the natural inclination would be for people to look at these hot IPO numbers and say, is this because a lot of these smaller companies are looking at the big guys making all this money? Why can't we do the same? Or is there still an archetype for what a good traditional IPO candidate looks like, despite the fact that the market overall is just hot?
Well, it's still all about growth. Always has been, probably always will be. I think now we're just seeing growth at a bigger scale than we used to see. And I suspect that this will continue. But what that has created in this glut we were talking about is an avenue for a new mechanism, which is the SPACs, these special purpose acquisition companies, where we're seeing companies that, and just generally speaking, right, but that maybe weren't meeting the typical threshold to do an IPO, are finding the SPAC avenue sort of a perfect outlet for them to go ahead and get public.
And Barrett, we've seen a steep drop off in companies coming to market through SPACs, at least when you compare from Q1 to Q2. We've also had a number of companies that have come to market, like a lot of these EV plays, who've really sort of shown that they haven't been vetted in the way they should be for other public companies that come to market through the traditional route. Do you get the sense that we're past the peak when it comes to SPACs? Or you think that despite all the scrutiny coming from regulators, we're still going to continue to see companies seeking out that type of option?
Well, I don't think SPACs are going anywhere. I think that they are a viable option for a lot of companies, and a lot of companies like them a lot. But I can't imagine seeing anything like we saw in Q1 of this year, right? I mean, that sort of blew us all away and caught everybody off guard. So, I mean, if you want to call it a top, I'm okay with that, but they're not going anywhere. People love them. I mean, people love, especially companies that maybe don't have the significant revenue growth yet and are able to provide projections, this is really something that excites them. And so we'll continue to see this avenue taken advantage of.
Looking forward, is there any sort of macro trend, whether that's rising interest rates, tightening policy, that could maybe put a damper on the pace of IPOs or broad capital markets activity?
Oh, sure. I mean, anytime we see, slowdown in the markets, I like to pay attention to the VIX, right? The volatility index. And I think most people in the IPO space do. It's still pretty low right now. And that's generally a pretty good sign that the markets are going to be receptive for these kind of companies. So, I mean, look, it still looks pretty good to me.